Hey, everybody. So today I want to take a look at some of the most recent housing market data and really most recent economy, US economy data as well. And there is some numbers in there that I find very, very concerning and very scary. And I think you guys need to be aware of them, that they're going to have really big impacts on a macro level on all of us, but also on some smaller segments, especially renters, I think are really going to be impacted by some of these numbers. But there's also some good numbers in there. We are seeing, I think, some trend reversals in certain patterns in the housing market, which I want to dive into today, which I think is a good thing overall for many home buyers and sellers and people wanting to get into the housing market. So today I'm just going to run through all of the most recent data around all of this. And by all means, if you guys have any questions, feel free to ask your questions down below or tune in and give your feedback as well. So let's go ahead and let's see if I can share my screen with you. So boom, should be able to do that. And then we can jump right into here. So this is a housing report from the National Association of Realtors that was just released a few days ago, right? And this is the most recent data around this. And there's a couple of things in here. I just read through the entire report, a couple of things that I really want to chime in on. So this one here really caught my attention, all right? Sales price to list price ratio of existing home sales. So what this is if you list a home for $400,000, what is the price that it ultimately sells for? Does it sell for $380 or does it sell for $420, right? Above list price, below list price. And this number got completely out of control a few months ago. I've never seen this before. But as you can see, just a few months ago, so June, July, August, this was actually above 100%. So nationally, homes were selling above 100% of their list price. So pretty much everything was selling above list price, which is not good. That's how you get home values going out of control and running away like that. And I remember working with buyers and telling them this exact thing, like, look, pretty much everything is selling above list price right now. If you guys want to get this home, you need to submit your offer above list price in order to lock in this new home that just came on the market. And I had buyers that just could not wrap their head around that. They're like, well, they're asking 400,000, we'll give them 400,000. And I was like, oh, that's just not good enough right now. We're at a very unique window in the market where that's not going to win you the offer. And I saw, you definitely can't offer people below list price if it's just came on the market, it's a decent property. But as you can see that we finally hit a trend reversal on this, right? We've kind of peaked out in July and now it's coming back down. Now it's still at 99.3% list price to sales price, which is unbelievable. This number, a few years ago, I used to use this number for the state of Maryland in my own listing presentations. I'd go and talk to sellers and say, the national or the average list price to sales price ratio is 95%. As you can see from my last 12 homes, I'm getting 98% list price to sales price. So when I sell homes, they're typically, sell for closer to list price than most agents. And I used to use that in my marketing. So 99.3 is unbelievable. I've never seen, other than just a few months ago, I've never seen a number that high. And so, yeah, if you're looking for a good bargain right now, a good deal, you're going to have a heck of a time finding that. I would really want to see this number come back down to about 95%. That's where it was at for a long time. It's pretty stable right around 95%. And you can actually see here back in April 2020 is a lot closer to 95%. That just quantifies how crazy this market got, that things were on average selling above list price all across the country. So there's a couple other numbers that we can look at here. Medium home sales prices are up 15% from 1 year ago. So 15%. So let that sink in, that in the last 12 months, on average, you've built about 15% equity in your property. So if you have a $300,000 home 12 months ago, it's now worth $345,000 today. So you just made $45,000 in equity just by being a homeowner with a $300,000 home. And that's just in the last 12 months, right? We saw unbelievably high price increases the previous 12 months as well, all through 2020. So this is still an unbelievable number. 15% is unbelievable. How much home prices are going up. It is a good thing for homeowners, though, right? A lot of people have built a tremendous amount of equity in their properties, which is a good thing. It's not a good thing for home buyers, though, right? This means that they now have to pay 15% more than they did 12 months ago. And I remember working with buyers, in early 2020, they were like, we don't want to buy now. We're going to wait for the housing market to crash. What goes up must come down. And I was like, man, I don't know if it's going to crash. I don't know if you're going to get a better deal anytime soon. And if those people would have purchased, 2020 when everything was going crazy, they still would have built 15% equity in the property in the last 12 months. And I'll be honest, I'm going to talk about this a little later on in this live stream. I don't see this trend reversing anytime soon. It may come down. Hopefully it's not going to be as crazy as 15%, indefinitely. But we're still going to see home prices increasing, I think, for a long time. And I'm going to dive into some of those numbers exactly a little bit later on. But it's just an unbelievable number, 15%. You can see it actually got as high as 20%. 20%. That's so if you had a $400,000 home, you built $80,000 in equity in the previous 12 months, which is unbelievable. So I've got a rental property, and rent prices have gone up like crazy, like everything else. And I've thought about, should I go and increase the rent on my tenant? And I decided against it. And so let's say I could get an extra $100 a month out of my tenant. So great. Now I'm getting, $1,200 a year. That's fine and dandy, getting some extra cash flow. But how I'm really making money on that rental property is just owning the asset. I mean, that rental property is probably, it's probably worth let's say it's worth $300,000, increases 15%. I made $45,000 in equity just by owning that property and having a good tenant in there taking care of it. When you look at that in perspective to getting an extra $100 cash flow a month, it's pretty insignificant, right? The real money is just by owning the asset. And that's why personally I've decided not to increase the rent on my tenant. I've got a good tenant in there, and I want somebody that's reliable and just kind of hold on and maintain this asset for me. So 30-year fixed rate mortgage, stayed at 2.87% during the week of September 3rd. So that's good. So this is really interesting. NAR chief economist Lawrence Yun, he's the guy who puts together a lot of these reports for the National Association of Realtors, expects a 30-year fixed rate mortgage rate to increase to 3.3% by the fourth quarter of 2021, which we are September, October, which is next month. Next month's the fourth quarter. So we're below 3% right now. He expects us to be in the low to mid 3.3% in the next few months. And that's pretty interesting. So what that's going to do, let's say the national mortgage rate does increase. That means that buyers have less purchasing power. They cannot afford as expensive of a house. If all things are equal, they get a 2.87% mortgage. Maybe they can afford a $500,000 house. On a 3.3% mortgage for the same monthly payment, maybe they can only afford a $450,000 house. So increasing the interest rate is one way to slow down this market. And that's one card that the Federal Reserve hasn't played yet. They could play that card at any time. They're watching these exact numbers as well. When they think these numbers are getting out of control, they can play that card and slow this whole thing down just by increasing interest rates. So he thinks interest rates are going to go up in the next quarter. So if you guys haven't refinanced your home yet, I don't think interest rates are going to go any lower. That's my personal belief. I'm seeing some people, mid twos, 2.5% on like a VA or FHA loan. I think right now is probably a pretty good time to refinance if you haven't done yet. And Lawrence Young's pretty much saying the same thing. And he thinks that they're going to average 3.6% in 2022, with inflation hitting 5.4% in June and July. So he's predicting that. So I love that he's talking about inflation. That's one of the numbers that have really got me scared. And I've talked about inflation before on this channel all last year. I know I brought it up several times. We're going to dive into some of those inflation numbers. He thinks that his projections next June, July, so mid next year, inflation will be hitting 5% those months as well. So I'm agree with him on that. That I think right now is a pretty good time to refinance if you haven't done yet. So yeah, and if you watch, Jerome Powell is the chairman of the Federal Reserve, and he's the one who dictates, the lending rate that he lends money to the banks at, and the banks then lend out to us, right? He's the one who could pull that trigger and increase the interest rates at any time. And he's talked about this before, that, he still has that card that he can play of increasing interest rates. And he's talked about potentially using that at some point. He hasn't played that card yet, but I'm guessing he's going to at some point. My understanding is increasing interest rates is another way to combat inflation. And inflation is getting a little out of control right now. So let's see. Monthly mortgage payment is rising faster than monthly wages. This is what's really scary. This is one of the scary ones here. So the yellow is the monthly mortgage payments. And you see that they've increased $191 in the last 12 months. At the same time, the average wage has only increased $175 in the last 12 months. So this is scary. We've now are entering this territory where those two lines have crossed, and that trend could easily continue. And I think it very well might, where home prices and mortgage prices continue to increase. As interest rates go up, your mortgage price your monthly payment's going to go up as well. And so that's not good for wage earners. Anybody who gets paid a salary, that's not a good sign at all, right? And that's majority of people are salary earners. So that's a number that we definitely need to keep an eye on, and it's not a very good one. So mortgage applications. All right, so this one is really interesting to me. So this is the number of people in forbearance. Now, this is a number that we were watching very closely all last year, and we had a lot of concerns that if they abruptly ended forbearance, a lot of those people would go into foreclosures and have short sales. And luckily, they've kept that forbearance going long enough that now a lot of people are starting to exit out of it. And this is interesting. This is a good number. I'm happy to see these numbers. 75.2% of homeowners in forbearance having a loss mitigation plan. Of the homeowners who exited the forbearance are in June 2020, August 2021, 75% exited forbearance by refinancing their home or selling their home, and 1.4% ended in a short sale or deed in lieu of. All right, so 75% ended forbearance by having a mitigation plan with their lenders. So they worked out a deal where they can pay them back the money that they owe, or they can, refinance something along those lines. And only 1.4% ended in a foreclosure or a short sale. So that's really good, because we were watching these numbers, and I'm really happy to see only 1.4% ended in a refinance. One of the good things about having all this equity in properties right now is that you have the ability to refinance or just to sell your home and walk away with a little bit of profit. And my speculation is that Jerome Powell and the Federal Reserve kind of knew that, and they planned that accordingly in order to avoid another foreclosure crisis. And that's why they lowered interest rates, to raise home prices deliberately to avoid a foreclosure crisis like we saw in 2008. That's my thesis anyway. And it seems like it's working out. So far, that plan is working out. 75% of people exited the forbearance plan with a mitigation plan in place. Only 1.4% ended in a foreclosure. And we see the number of people in that forbearance is really decreasing. Now, we were also really concerned that the forbearance may really hurt the banks, right? That the banks may, they're not receiving any of their mortgage payments. But it doesn't seem to be the case, really. And I think forbearance, I think that's all looking pretty healthy right now, which I'm happy to see. All right, multifamily markets, with the average asking rent price per unit up 10.6% from 1 year ago. Okay, so this is condos and apartments are charging 10% higher rent than 1 year ago. And 1 year ago, I'm pretty confident that was a lot higher than 12 months prior to that. So 10% in the last 12 months. You can see it here on this chart, just how unbelievable this increase is here in the rent prices for condos and apartments. This is what's getting really scary. So for more and more people, we showed you that their housing expenses is increasing at a faster rate than their payment is. These people, home ownership is becoming unaffordable for them because home ownership, is the price of the homes have increased 15% in the last 12 months. And even if they don't want to play in that market, they don't want to buy a home, they don't want to deal with all that, they're still being impacted. The 10% increase in rents is what they're getting charged because really no reason, because they can, because they think that the value of their apartments has increased and their property has increased in value. So they're just charging higher rent to their tenants, which it really sucks. Like the landlords don't need to do this. They're not under any pressure or anything. They're only doing it because they can. And so this is what I don't like seeing. I think that the lower and middle class earners are really feeling the pressure of our economy right now. So there's a stat that 50% of Americans don't own any assets whatsoever. They don't own any stocks and they don't own any real estate. So who owns real estate and stocks? It's the middle class and the upper class. They have all the ownership in land and real estate. So middle and upper class have seen a 15% increase in their real estate assets values in the last 12 months, whereas the lower middle class who don't own any stocks or real estate, they're not seeing that increase in their net wealth. In fact, they're seeing a decrease because now they have to pay 10% more to those upper class folks in rent. So we're really seeing that wealth gap, unfortunately, is still increasing. It increased a lot in 2020, and it's still increasing at unbelievable rates. I mean, this was just, just in the last 12 months, we saw this 10% increase in rents in multifamily units, which is pretty scary. What's this one here? Okay, this is about jobs. I think the job numbers are looking pretty good. So let me take a look at another one that really has me concerned. I want to talk to you guys about inflation. So inflation is getting out of control. So this is a chart that shows the U.S. dollar, the circulation of the U.S. dollar since the 1970s. And I went back to the 1970s because that's when Nixon took us off the gold standard and we created a fiat currency, right? And fiat currency it's just backed by the government. It's not really backed by anything. Prior to that, they couldn't just print as much money as they wanted to because everything had to be tied to gold. But in the 1970s, they've kind of unshackled themselves, and now they can print as much money as they want. And this is the increase in the circulating supply of money since the 1970s. So since 1970, since they took us off the gold standards to today, the US dollar has lost 99% of its value. Let that sink in. Because of inflation year over year over year and kind of the compounding inflation, US dollar has lost 99% of its value. That's why, you could buy a house for $10,000 in 1970 and it's now worth $400,000 because of inflation. And so they just released the latest numbers for inflation. And we've hit 5% inflation in the last 12 months, or 3 quarters in a row now. That is terrifying. That is very scary and not what we want to see. Jerome Powell said that they wanted to get inflation to about 2%. It's out of control. It's now at 5%. If you watch Jerome Powell's presentation to Congress, he talks about how this number is almost certainly underestimating inflation. He says that. Chairman of the Federal Reserve, who is in charge of controlling inflation, he's got a couple of levers that he can pull, including like how much currency we print, what interest rates are. All those things kind of factor into inflation. And he said that this number is almost certainly wrong, and it's almost certainly lower than what the actual inflation is, which is really scary. But even 5% is really scary. So if you had $100,000 in your bank account, in the last 12 months, you've lost essentially $5,000 due to inflation. So that $100,000 can only buy what you could have bought with $95,000 12 months prior to that, and $90,000 24 months ago, right? Let that sink in. My grandfather passed away in 2006, and he left my grandmother about $100,000. And, you know, she's in her 80s. She doesn't want to invest that. She doesn't want to stick it in bonds or anything, just wants to keep it in her bank account. And she's had it in there now for about 15 years. Because of inflation, that $100,000 is literally, it's probably lost 60% of its value. It's now equivalent to if you would have just left her $40,000, right? Let that sink in. So she's lost probably about $60,000 or so of that value due to inflation. That's how inflation works. The US dollar is worth less. What this also means, though, is that let me hop out of here. So what that also means, though, is that if you are a wage earner, right? I don't mean to get political here. But let's talk about minimum wage for a second. I think the last time minimum wage was increased was, I believe, 2009. I believe it got up to like $7.25 was the minimum wage. Every single year, people making that minimum wage have gotten a pay decrease. And in fact, in the last 12 months, they've just gotten a 5% pay decrease. Because that's $7.25 minimum wage, but I think it is. They can now buy 5% less what they could have before. And everybody who is a wage earner, everybody who has a job gets paid a salary. Your salary is based off of what minimum wage is, right? That's the floor that your salary is based on. So maybe you make 2 times minimum wage, or 5 times minimum wage, or 10 times minimum wage. Sorry. But it's all based on that minimum wage floor. And every single year, that number, the purchasing power of that gets decreased by 2%, 3%, whatever inflation is that year. And now it's 5%. So you can now purchase 5% less assets with that minimum wage than you could have 12 months prior. And this has been going on since 2009. It just keeps accumulating more and more and more. And here's how this works and why there's so many corporations and businesses fighting to keep minimum wage as low as possible. Corporations make more money with higher inflation rates. Let that sink in. So let's say you're a grocery store, you pay all your cashiers minimum wage. You see inflation, right? The price of carrots goes up by 5%. You pass that on to your customers, right? And you guys have probably all noticed that it's costing a lot more to buy groceries now. Every time I go to the grocery store, it's at least $100. So they pass that minimum wage on to customers, but their operating expense of hiring their employees stays exactly the same. So they're making more money, and because they're charging the customers more, but their operating cost is staying the same. So with inflation, they keep making a little bit more money, but they're keeping minimum wage exactly where it is. So their operating costs are staying exactly the same. So corporations and people who hire minimum wage earners make more profit with inflation. Let that sink in. That is why they want to keep the minimum wage exactly where it is, and why they're not afraid of inflation. Now, let me tell you about another thing that a lot of corporations do is that they'll take out like $100 million loan and pay it off on the longest timeline that they can, because with inflation, that number becomes essentially reduced every year. If you have a $100,000 loan, you see 5% inflation, well, you still owe them $100,000, but that $100,000 debt is effectively worth 10% less. You know, if you took out a 30-year loan and bought a home for $100,000 in 1990, because of inflation, that house is now worth $400,000, but you still only have $100,000 worth of debt. So debt, this is all kind of the game that they play with inflation. Let me see. Does this break down the sales price of newly built homes versus existing homes. Yeah, good question. I don't think I have that stat in there. So what they should make moves to get off minimum wage. That's what I did, and I'm an immigrant. Yeah, so even that's not quite enough because all wages are based off of the minimum wage. And what we really need is the minimum wage to increase every year with inflation. So we see a 5% increase in inflation. Great, minimum wage needs to go up 5% as well. So let me show you some more charts here. So this is, I showed you this one. This is the circulating supply of US dollars. You go back to supply and demand. As supply goes up, supply goes up, the value of that asset goes down. That's what inflation essentially is. This is the US home prices, the average price of a home in the US. Do you guys see a correlation? Do you see a similar pattern here with this one compared to this one, right? Inflation is what drives the home price increase. Inflation is why homes increase every single year. On average, homes increase typically about 3% a year in value. And that's pretty close to also what inflation is every year as well. And this is why I don't foresee a housing market crash. People talk about housing market crashes, and I show them this chart. Like, look, this is a long-term asset. I don't know what it's going to do in the short term, but if you intend to live here for the next 20 years or 10 years or 7 years, this is what we're looking at. And with inflation, the home prices are going to keep going up. The value of all assets keeps going up because it's not actually the asset increasing in value. It's the US dollar decreasing in value. That's what it is. So you now need the home price could stay exactly the same, but if the value of the US dollar decreases, you now need more US dollars to buy that asset. So that's got me really scared, right? Inflation is a scary, scary thing, and it could actually get worse. So you can see here we're at 5% right now. If you go back to 1980, we saw 15% inflation in 1 year. So if you had $100,000 sitting in your bank account, in 1 year, you effectively lost $15,000 by holding on to US dollars. In just 1 year, you lost 15% of your purchasing power. And then, the year after that, you lose another 10%. And then a year after that, you lose like another 8%, right? This is how inflation goes. And we've seen as high as 20% inflation. And we're not done. We're going to keep seeing more inflation. If you zoom in here, just how much money they've printed in 2020 and 2021, it's just unbelievable. It's unbelievable. And this is a leading indicator. We haven't seen the impacts of this in inflation yet. I don't know how long it takes. It could take 12, 24 months, but we're just now seeing the impacts in inflation. And I think because of that, home prices are going to keep going up. They're going to keep going up at a minimum, following with inflation and possibly leading inflation a little bit. But yeah, this number is going to get a lot higher. It could get a lot worse. It could get 10%. I would not be surprised if we saw 10% inflation because we've never printed this much money before. So anyway, that's really got me concerned is the inflation. So what can you guys do to kind of prepare yourself for inflation? Well, one, you can own a house, right? All assets increase in value when the US dollar decreases in value because of inflation, right? Relative to the US dollar. So your home is going to increase in value relative to the US dollar with inflation. But stocks are also going to increase in value. You guys have noticed that we've hit new all-time high after all-time high after all-time high pretty much every week, regardless of who our president is. That's inflation. That is inflation right there. And what sucks is that, like I said, 50% of Americans don't own any stocks whatsoever. So who owns stocks? Who owns real estate? It's the middle and it's the wealthy. So they are okay with inflation, right? Why not? They want to see inflation. If they have massive amounts of debts, hundreds of thousands, hundreds of millions of dollars in debt, with mortgages on properties, those mortgages debt is essentially getting reduced with inflation, and the value of their assets are essentially increasing. So anyway, guys, that's got me really, really concerned. Yeah, no problem, King Lucas. I got to get back to posting content. Yeah, if you guys have looked at my channel, you notice I haven't posted anything in 6 months on this channel. I was really going gung-ho on it. I was really uploading a lot. But I had some family matters kind of take over, and I just haven't posted in a long time. But I want to get back into this process. I like doing these live streams. I like answering your questions about real estate. And hoping to do a lot more content, on this channel. We have a lot of really interesting things to talk about, especially with inflation. But if you guys want to benefit from inflation, this is what people are not going to tell you. If you want to benefit from inflation, you want to take out a lot of debt at a very low interest rate. And the best way to do that is with purchasing a home. Not credit card debt, not 23% interest debt, but buy the most expensive home that you can. Finance as much of that as you can. Like, this is terrible advice. Like, people or everybody will tell you this is terrible advice, and this is very controversial, but that's how you benefit from inflation. I used to try to pay off my mortgage early. I used to make extra payments. I wanted to get out of debt. I don't do that anymore. I want that debt because with inflation, that debt decreases every single year. And with inflation, that asset increases in value. And real estate is one of the few things where you can get massive amounts of leverage. Let's say you put 5% down, you're getting 20x leverage on that that 5% that you're putting down, which is unbelievable. You can't do that anywhere. You're getting 20x leverage, and that entire asset is increasing with the rate of inflation, not just your 5% that you put down. So this is the game. This is the game that the wealthy play. They benefit from inflation. They buy assets that appreciate in value with inflation, and they take out massive amounts of debt that decreases with inflation every single year. And the great thing is, once you realize that, you can do the same thing. You can play that same game. So personally, as soon as I get paid, I get money, I put it into something. I put it into cryptocurrencies. I put it into stocks. I'm looking at buying a third house right now, and I want to finance as much of it as I can, take out as much debt as I can on that house, and still get these really low interest rates. And that's how the game is played, and that's how the wealthy keep making money. And if you guys can, if you're a wage earner, if you get paid a salary, make sure you talk to your boss. Show them this 5% inflation rate. You effectively just got a 5% decrease in your pay. That's exactly what that means. Everybody has got a 5% decrease in their pay. You need to show these numbers to your boss, because most businesses, they pass that inflation on to their customers or clients, right? If they're what they're selling increases in value to them, they increase the value to their clients, but they keep your pay exactly where it is, right? You want to show these numbers to them, make sure that they're at least keeping your pay up with inflation, ideally passing inflation. Elizabeth Warren was just in the news not that long ago because she gave everybody, all her staffers, everybody, I think it was like a 10% pay increase. And what that indicates to us is that she thinks that inflation is at least 10%, because those 5% numbers are almost certainly wrong. Jerome Powell has said that. Other experts have said that they're almost certainly lower than what inflation actually is. So anyway, that's it for today. I hope you guys enjoyed that. I intend to do some more videos on this channel, some more live streams like this. And yeah, make sure Robert Kiyosaki says, if you're a saver, you're a loser. And that's rough, but what that means is that you're losing value by saving money. Get that money into some sort of asset that appreciates with inflation. Get out of the US dollar. The US dollar it's lost 99% of its value since Nixon took us off the gold standard. Let that sink in. 99% of its value. What you could buy and we all know this, right? You can buy a soda for a nickel, and now it costs you $3 for a soda. That's inflation. That's 99% of its value decreasing. All right, that's it for today, everybody. Thanks so much for tuning in. Great advice. Thanks. This is the type of info poor people need to get out of poverty. Yeah, there is a game that's being played by the wealthy, and this is how they play that game, is that they own assets that appreciate in value. Jerome Powell is the wealthiest chairman of the Federal Reserve we've ever had, right? I think his net worth is about $50 million is what I saw. So he knows how to play this game, and it's a little concerning that he's making maneuvers that are going to increase his net worth. I can guarantee you he owns assets. He doesn't have $50 million in cash. He has $50 million in real estate and stocks, maybe cryptocurrency. And so all these moves that he's making, in his mind is like, well, why not? I'm going to increase it in value tremendously. All right, that's it for today, guys. Thanks so much for tuning in, and I'll see you on the next one.